Listen up. Because what I'm about to share could change how you see BHP stock forever. By November 2025, BHP Group's share price might surge, or crash hard. And the odds are more surprising than most people think. If you stay with me to the end, I'll reveal my bold price prediction, backed by production data, commodity demand, and macro trends. But first, you need to understand the game behind BHP's future. Don't click away. This could be a turning point. Hey everyone. Welcome back to Everyday TV, where we dig into the stock market's biggest movers and future bets. If you want daily or weekly predictions for big cap resource stocks like BHP, make sure to hit subscribe and tap the bell now. Here's where BHP stands today. The mining giant recently reported record copper and iron ore production. Their 2025 results show underlying profit of $10.16 billion, and it's a big but. That's actually down 26% year over year. Why the drop? Falling iron ore prices, pressured by weak Chinese demand. Still, BHP managed record copper output, over 2 million tons in fiscal year 2025. That's huge, because copper is the metal of tomorrow, vital for EVs, infrastructure, and decarbonization. On top of that, BHP's CapEx, capital spending, remains disciplined, setting them up for long-term value. But it's not all sunshine. BHP is facing significant risks heading into the next 12 to 18 months, and those risks are why my prediction is not a simple buy. Let me break them down. 1. Iron ore demand pressure. China's steel output is showing signs of slowing, and BHP itself warns of macro volatility. Less demand from China could further depress iron ore prices. 2. Dividend cut risk. The company just cut its dividend to 60 cents per share, its lowest in 8 years. That could spook dividend investors. 3. CapEx overruns. BHP's huge Jansen Stage 1 potash project in Canada is delayed and costed now at United States dollars to 7.4 billion vs earlier $5.7 billion. That's a big drag if growth doesn't come quickly. 4. Commodity market surplus. According to BHP's own outlook, steel-making raw materials and nickel could be in surplus, which may suppress prices. 5. Longer-term iron ore risk. Analysts at Morningstar argue iron ore could fall to almost 72 United States dollars per ton by the mid-cycle, reducing long-term earnings tailwinds. If BHP mismanages any of these, the downside is real, and that's why many investors are on edge. But don't count them out. BHP is not just relying on iron ore. They're betting big on copper and potash, and that could pay off massively. Their long-term copper outlook remains very strong. BHP projects durable outperformance, driven by electrification, urbanization, and supply constraints. According to their fiscal year 26 guidance, they expect copper production to remain 1.8-2 million tons, showing production strength even with declining ore grades. Their capital discipline is solid. Despite the Jansen project's increasing cost, BHP maintains disciplined CapEx, helping ensure long-term returns. They have a diversified portfolio: iron ore, copper, potash, not putting all eggs in one basket. Macro tailwinds. IMF sees global growth at approximately 3% for 2025, backed by Chinese stimulus and infrastructure demand in emerging markets. Okay, here comes where things get very interesting. In just a few minutes, I'll share my target price for BHP in November 2025, and why I believe most investors are missing something major. Stay with me, you don't want to guess wrong. To validate my thinking, I checked what the experts are saying. Macquarie is cautious. They've reduced their target for BHP to 42 United States dollars, citing medium-term earnings risk. But others are more optimistic. BHP itself projects that long-term demand for copper and potash will remain strong, even if short-term macro noise persists. On the flip side, Morningstar warns of iron ore price pressure long-term and sees possible downside if BHP's cost base rises or commodity markets glut. According to TipRanks, BHP's recent record production may give it resilience, but some analysts still rate it as hold, given macro uncertainty. So, conflicting signals. Some see value, others see risk. That's exactly why we need to dig deeper, and I'm about to lay out my own forecast. Here's my bold prediction for BHP's share price in November 2025, and why I believe it could land in a range from $45 to $55, with a base case of $50. Let me break it down. 1. Base case of $50. I believe BHP's strong copper production, 2 million ton and demand tailwinds will partially offset weak iron ore pricing. Global stimulus, especially in India and China, will sustain demand for steel and copper. With disciplined capex and cost control, BHP can maintain profitability and its dividend, making it attractive to long-term resource investors. 2. Upside scenario of $55 plus. If copper prices strengthen more than expected due to supply constraints or accelerated EV infrastructure build-out, BHP could re-rate. If BHP successfully manages the Jansen project and capitalizes on potash demand, long-term earnings could surprise to the upside. A favorable macro surprise, like more Chinese infrastructure stimulus or a strategic inventory build, could boost commodity pricing, boosting BHP. 3. Downside risk to $45 or lower. If iron ore weakness continues or worsens, and if China's steel demand disappoints, BHP's earnings could compress. Capex overruns or delays, like Jansen, could strain cash flows. Dividend cuts or financial stress could spook dividend-focused investors, triggering a sell-off. So, in summary, $50 is my central view, with meaningful risk above and below. But here's the twist. We may not even need to wait until November and to see part of this play out. To make or break this prediction, here are the catalysts I'll be watching very closely over the next few months. Copper price trajectory. Any surprise shortage or supply disruptions could turbocharge BHP's earnings. Iron ore demand in China and India, infrastructure stimulus, property sector policies, or steel capacity decisions could swing demand widely. Progress on Jansen Stage 1. If BHP can manage costs or deliver first production early, that's a massive win. Global macro risks. Trade policy, interest rates, inflation. BHP is not immune to all of them. BHP's balance sheet and dividend policy. Any changes will impact how investors value the stock. Income versus growth play. If at least 2 or 3 of these go BHP's way, we could well see $55 plus by November. But if they go wrong, downside is real. I promised something special, so here it comes, a secret risk factor that almost no retail investor is talking about, but which could make or break my prediction. But first, if you've found this analysis useful so far, hit like, share with your investing crew, and subscribe if you haven't already. Seriously, this helps me bring more deep dives like this. Here's the secret risk. Regulatory and geopolitical risk tied to mining expansion. BHP's long-term bets, like Jansen Potash or large copper expansions, are not immune to government regulation, permitting delays, or rising environmental costs. Even if demand is there, policy risk could throttle project economics. And if that risk materializes, it could blow holes in BHP's growth story and drag the stock lower. That's why I'm not just watching commodity prices. I'm closely tracking BHP's regulatory updates, capex disclosures, and any geopolitical noise around its big projects. So to recap, by November 2025, I forecast BHP could hit around $50, with a potential range of $45 United States dollars minus $55, depending on how key catalysts play out. The opportunity is real but risky, and success depends on copper demand, project execution, and macro discipline. If you like this kind of deep, forward-looking analysis, smash that subscribe button, hit like, and share this with friends who trade or invest in resource giants like BHP. Drop a comment. Do you agree with my forecast, or do you think BHP is overvalued or underappreciated? I want to hear your take. Thanks for watching. And remember, this is not financial advice, just my well-researched hypothesis. Trade smart, stay curious, and I'll see you in the next one.